an e-commerce store? SCCI Website Builder is the solution. SCCI Website Builder help you to easily build a professional website with a low cost. There is also SEO and marketing functions to promote your website. What if you face an issue? Our customer support will be there to help you. Wait no more, contact us to get your trial account and start creating your website.
Okay, without further ado itself, let's invite our host for the day, Victor. Victor will be sharing on the outlook for the week itself. Victor, you can share your slides? Okay, thank you, Victor. I'll hand over to you. You are in mute. Okay.
Good evening, everybody. Can you all hear me? I think okay, right? I'm mute.
Thank you.
Right. Okay, I trust you all had your dinner. So sit back and just see what I have to say on the markets. As usual, I will always put this on the screen because once you're a dealer, you're always a dealer, right? This one is from the Forex Association International. So those of us who have been dealers in the bank, we will always be dealers, okay, no matter where we go. Even though we can be private bankers, after that, we are still dealers at heart. Okay. Again, some of you have heard, I know there's some repeat guests on the screen. I always like to do this because, for the new followers on this chat, I started my career in 1983, Bank of America as trainee dealer, then went to Citibank as senior dealer in 1985. I left Citibank in 1991 to be Treasury Manager of Nations Bank, and now known as Bank of America. So it's one cycle again. And I left in 98 to pursue a career in private banking with HSBC. I was there for 8 years. And after that, I left to be currency analyst with Informa Global Markets before semi-retiring in 2017. Okay, at the moment, I'm doing part-time lecturing at SMU and Kaplan for the Murdoch University Business Program and also the University of London Business Program. And I am also trainer in the Skill Futures Fundamentals of Forex Trading, Hedging, and Risk Management course. Now, I was lecturer and trainer at the Institute of Banking and Finance, and for many central banks, including the MAS, Central Bank of Macau, Bank Negara Malaysia, Bank Indonesia, and the BIA, which is the Brunei Investment Agency. In the 80s and 90s, I was on Money Mind several times. And I was also the panel speaker at the NUS Econometric Studies Unit as an FX expert. And I recently participated in the University of Essex and Kaplan Symposium on alternative financing, rethinking financial education. Okay, so that is my very brief outline. If I want to go through the whole thing, it'll be quite long. So, but at least you know who am I, who's talking to you. Okay. Today we had one important central bank decision, okay, which is the RBNZ, and they left rates unchanged. Why? Due to the COVID cases in New Zealand and the 1-week lockdown in Auckland. All right. The other parts are 3 days. But Auckland, because they had a 1 case and then they had 4 more cases, so now there's a 1-week lockdown in Auckland. Now the 1 case and then the following day, which is today, there were 4 more cases, but they were all related. So not so scary. What you don't want is, like in Singapore, is you have 1 and then the other 4 are all unrelated. But all these 4 are related to the 1. So of course, yesterday when it came out, the news, the New Zealand dollars got hit very, very hard. Okay. And then it continued to stay weak. And then because of the risk aversion, all right, following the weak retail sales data in the US last night, it sent the New Zealand dollars, or also known as the Kiwi, to a fresh year low of around 0.687075. Now, why will risk aversion occur when you have weak US retail sales? It's very simple. When there is a weak retail sales in the US, it simply means consumers are not spending money in the US. And when they don't spend, they don't buy, growth will be slow. And when growth is slow, profits in the companies will be slow, and therefore stock market will be weak. Right? That's how it goes. But of course, because there is so much money in the US because of the what you call the quantitative easing, money continues to flow every month. So the stock market is being supported all this time by the Federal Reserve buying of bonds from the banks, from the corporations. So it has continued to remain strong. All right. For this year, the stock market. But, you know, it's getting to a point where one day when the US decides to take the buying of the bonds off the table, which is called tapering, that's where you will see a very nasty correction in the stock market. And I don't know when that's going to happen, but I reckon 3 to 6 months, between now and 3 to 6 months. Okay. Now, however, I believe that the COVID situation, especially in New Zealand, will be brought under control sooner than later, right? Because as you know, New Zealand is very good at controlling and keeping COVID-19 under control. The moment it comes out, you see, yesterday 1 case come out, straight away lockdown, right? They don't want it to run rampant. So therefore, because of the COVID situation, RBNZ left rates unchanged, but that will mean when they meet in October, they will hike rates. All right, so unless the situation becomes worse, unless COVID becomes rampant again in New Zealand, then of course there would be no rate hike in October. But if the COVID situation is brought under control and the economy starts to grow again, I believe the RBNZ will definitely hike rates in October. Whether it is 25 basis point, which is 0.25%, or whether it's 0.5%, all right? But they will hike rates. Why? Firstly, the inflation in New Zealand is high. So that one, by raising interest rates, it will control inflation, all right? And secondly, home prices are also very high. So if home prices are very high, it will eventually feed a little bit into the inflationary picture. So it will make it very, very difficult for the RBNZ not to hike rates in October. Okay, so whether they hike by 25 basis point, 1/4%, or by 0.5%, it's left to be seen again, depending on, because now is August, don't forget, August to October is 2 more months. Between now and October, a lot of things can happen. Growth in New Zealand may spurt even higher, or inflation may go even higher, or the economy, all right, may get even stronger, all right, because once the COVID situation is under control, normally the economy will jump very, very quickly. Okay. So therefore, I think we can look to buy New Zealand on dips. All right. Maybe around 0.6870, 6880 thereabouts, or a better, which I will repeat again later on in the next slide, is to sell Aussie Kiwi on any rallies, all right, towards 104.90, 105, all right, now it's around there, okay? It went up to 105.10, 15, just about 2 hours ago. Okay, so that is what we can do over the next few days. The US dollar rally, I believe, is unsustainable, all right, because of the weak retail sales data. And this, I believe, will keep the Federal Reserve, from tapering, okay, for now. Tapering means they take the money off the table. Okay, somebody is asking a question. No sound. Can you hear me? Still have sound? I am unmute, so can you hear me now? Anyone? Can hear, cannot hear?
Mr. Victor, yes, I think we can hear you.
Oh, you can, huh?
I can.
Okay, that's good. Okay. So I don't know. Hi, NG, is it? NG, I don't know, maybe your sound. Can you check your sound on your side? Okay.
I can hear already.
Okay, great. That's good. Okay, so the US dollar rally is unsustainable. So therefore, the Federal Reserve is not going to talk about tapering. If any of you who has traded foreign exchange, you know the word tapering, okay? If any of you don't know the word tapering, of course, you know, of quantitative easing, then, you know, I will lead you, you know, somewhere, you know, where you will know later on, okay, during the presentation. Now, tonight there is the Federal Reserve Open Market Committee minutes, right? They will tell you what happened when they met 2 weeks ago and what the minutes is all about. Now, the Federal Reserve minutes can change, you know, whenever there is a need to do so. They may change the minutes from being a hawkish minute. Hawkish means Federal Reserve wants to be tightening. Dovish means the Federal Reserve wants to be easing. Okay, so their last meeting 2 weeks ago, they sounded a little bit hawkish, but because over the last 2 weeks, the US inflation data was cooler. I mean, inflation went down a little bit on a month-to-month basis, and the retail sales also weaker, means the Federal Reserve has a very good case for not talking about tapering, all right? And they may put it into the minutes which will come out at 2 a.m. Our time. In the next 2 a.m. means about another 5 hours. All right. So that is what's going to happen. Okay. So this is RBNZ. This is Kiwi. And now we talk about Aussie. Okay, Australian dollars. I like to trade Aussie and Kiwi because they are currencies that do not run so wild, okay? Unlike other currencies like yen, sterling, can run a little bit wild. So I chose Aussie, New Zealand, or New Zealand dollars for that simple reason. It allows me to sleep well at night. Okay, tomorrow we have Australian jobs data. That is forecast to show a decline of, you can see here, negative 46.2 thousand jobs versus plus 29.1. Okay, and the unemployment rate is forecast to go up to 5% versus 4.9%. And why is this happening? Very, very simple. You have the COVID situation running out of hand, especially in New South Wales. Victoria is not so bad. They're putting it under control, but New South Wales is very bad. And other parts of the states have, but not as bad. New South Wales is particularly bad because when they all go to beaches, you know, many Aussies, many Australians don't wear masks. And their vaccination rate is only like 24% around there. So you imagine, 3/4 of the country is not vaccinated. So what do you expect? All right. So it's going to get worse probably before it gets better. And the participation rate is forecast to fall to 66% from 66.2% due to the lockdown in many states. Okay. So my own gut feel is that the worsening situation may see the data surprise to the downside, which will hit the Aussie dollars very hard, right? Tomorrow. So another thing that's going to be quite bad for Aussie is slower China growth, which will lead to lower commodities, and that will also weigh on the Aussie dollars, all right, over the next little while. So there is scope for the Aussie to slide further in the very short term, okay? However, given that the US dollar is somewhat toppish around these levels, all right? Remember, I was telling you just the few slides away, selling Aussie New Zealand, all right, towards 105.10.20. All right, I've changed a little bit. Earlier on, I put 104.90. I think 105.10.20 is a better proposition because if you sell Aussie against US, there is a chance that the US may decline, may weaken, all right, over the next few days. So if US weaken, Aussie will go up. So if you sell Aussie, you will suffer. But if you sell Aussie against New Zealand, because they are so-called cousins, all right, it's better because people expect New Zealand to be better than Australia in terms of economic growth, and people expect New Zealand to interest rates to be higher than Australian dollars. So given these two, and of course the better economy in New Zealand, it's better to sell Aussie and buy New Zealand. All right, at 105.10.20, which is there now, it's around there. And then you can take profit, you know, quite a good profit over the next, depending on how long you want to hold. You want to hold short term, you want to hold long term. Okay, it depends. I'll tell you, you know, what I do normally with my chat group as well later. Okay. So this is what I've been talking about. All right. Any questions before I continue? Any questions? So just ask on the chat. Don't worry. Even those of you who are not familiar with foreign exchange, want to know foreign exchange, just ask on the chat. Or those of you who are trading foreign exchange, please ask. Anybody?
Uncle Victor,
You can
I
go on
think
the mic.
your Uncle Victor, my name is Francis. I think what you have presented is clear, is concise, and is to the point.
Okay, so no question.
No questions.
Good.
Yeah.
Great. Now I normally give time. So if between now and the next few minutes, you know, you have questions, please go on the mic or go on the chat. All right. I will definitely answer. Okay. Whoops, sorry. Okay. Now those of you who are currently trading FX and you feel that your performance is not up to where you want it to be, or you don't have enough time to monitor the market, you can join the SCCI Market Tips chat group, which I run, where you will get daily trading views with entry and exit, stop loss, and take profit levels. Okay, so every day you will get at least one trading view, if not two. All right. Today there's many, all right, because today the market moved. So I was on the chat group quite constantly, you know, over the last few hours, telling people whether to buy, to sell, or all that, you know, in the chat group. So in addition to getting the trading views, you will also be in a group of active FX investors to learn from them and they from you. All right. That way you will sharpen your trading skills. All right, by being in the group. The fee is at a very affordable 28 cents per day. All right. Every time I do this, I laugh because it doesn't even pay for 1/5 of your kopi. Okay. Even if you drink the tea, you know, 110 or 120, you know, it's only like, you know, a fraction. Or $100 per annum. Right now, sorry, there's no more next 7%. I forgot to change this. Now there's three spots left. After these 3 spots, it's going to go up to 130. Okay, it started at 80. Now it's 100, so it's going to go 130. So please join early to avoid paying the slightly higher prices later. But then again, I mean, 100, even 130, you know, per annum, it's like only how many cents a day? And if you do foreign exchange, you know that foreign exchange is a so-called big money game, you know. So what is 30 cents, 40 cents per day, you know? You can contact me at 9452-1922 if you are interested, all right? To let me know how you're going to be on the chat group, and I will give you the details. Okay, so thank you. Now, so what I'm going to do now is I'm going to stop here for 1 minute. I mean, I finish this part of the so-called presentation, all right, on the outlook, give you the views. Okay, now the next part of the presentation is to tell you, all right, how you can be longer term, all right, in the marketplace. Longevity, what is the key? Okay, after trading for more than 3 decades, I believe that the key to longevity is to have good risk management in place. Okay. Why? Because when you make good profits, the key is to stay. To stay in the game is to keep those profits instead of giving them back to the market. Okay, that's the key. So if I can make $500 today, and I put my risk management in place, all right? So when I cut loss maybe $100, $150. I still have $350, okay? But there are people, and I know of many, who they make $500 and they give $500 back or more the next day or two. Because why? There's no good risk management, all right? So risk management is a very important thing to put in place when you want to last doing the foreign exchange game. Okay, now, and I always ask myself an observation, why are many bank dealers profitable? And I've come to the conclusion, a very simple conclusion, why a high percentage of bank dealers make money and the retail FX investors lose money? Because of training, right? Training. Bank dealers are trained very well by the senior dealers, by the chief dealers. They are trained in both fundamentals and technicals, all right? And so therefore they use fundamental, they use technical, and they trade. And they do very well. But if people who trade use only one, I mean, you use only fundamentals or you use technicals, you can still do okay. But if you have both, I believe you can do better. And again, observation, people who use one, either fundamental or technicals, they do not last long. After a while, they give up, right? Nowadays, technicals is important, but so is fundamentals. Why is the dollar holding around here? Why is it fairly strong? Okay, you need to know that. All right, now, after teaching and training the central bankers for 20 odd years, right? I'm now bringing this to the public via the Skill Futures Forex trading, hedging, and risk management course. Okay, and of course, I look forward to training you. If you have not been trained, or if you want to learn about foreign exchange, either as a retail FX investor or as an FX hedger. All right, you can come to the Skill Futures Forex trading, hedging, and risk management course. The course will teach you, retail investors, how to trade foreign exchange, how to make money. It will also help participants who have companies or who have bosses that own companies to recognize that foreign exchange movements can have a huge impact on their bottom line and how they can go about hedging their exposures. Okay. I have many friends actually in the past, in the 80s, 90s, early 2000s, they have companies, but many times they do not cover their FX exposure, and it resulted, right, in them making less profits than they would have if they had covered their FX exposures. And one of them was actually a friend in a chemical company. And we found out that, hey, he bought Japanese yen, always at a very high price. And then when he sold US dollars, or he sold euro, or he sold, let's say, other Asian currencies, it's always at a low level when converted to Sing. But since fundamental money markets, right, he's quite grateful, and he makes money trading this knowledge to someone in which you learn how to trade foreign exchange and other asset classes. And then, of course, after this course, I will put you in a chat group where you will enhance your knowledge on foreign exchange, and you also get trading ideas. This is in a group that I normally put when people attend my course. In order to get more so-called trading ideas, more tips, that's why it's called SECI Market Tips. Yeah, you can join the other chat group, which is more active, the paying chat group, okay? This chat group, after your course where you join, you don't need to pay. All right, but I will still teach you. It's a follow-up, you can call it a follow-up lesson where you continue to learn stuff. Okay, again, please do not hesitate to call me at 94521922. All right, and you can scan the QR code, which I will put up later on to register. All right, so those who are Singaporeans above 25, you would have SkillsFuture credits between either 500, 1,000 or 1,500. If you are between the ages of, I think 40 to 55 or something like that, you have more, all right, credits. So you can use that to offset your course fees, all right? So what you do, you actually learn, you learn something, all right? And you're sponsored by the government. After you attend the course, you would receive support from me, from the chat group, all right, where you learn with like-minded traders, and you will also, okay, receive 3 books, so-called. One is an introductory guide to FX markets and trading. This is a fundamental analysis on fundamentals. That means how economics, how politics affect foreign exchange rates. And then the technical part, becoming a trading master book. This one will go through with you the technicals, all right, the technicals. What is head and shoulder? What is Fibonacci numbers? What is Elliott wave? It will go through with you. And then the maximizing profits and minimizing losses. That part is the risk management part, where you need to learn because it is important. All right, you need risk management so that you will limit your losses. Okay, so the next course is on the 28th of August, which is next week. But otherwise, if you miss the 28th of August course, I have one every month. That means there will be one more in September if you want to register for it as well. This is the QR code. I will give you 2 minutes if you want to scan it so that you can register if you would like to.